Asia shares have been mixed today as consumer spending in Japan has prompted GDP growth to exceed expectation at 5.9%. Harumi Taguchi of IHS is on the phone with me now. Harumi, is this spike in growth merely a reaction to the sales tax increase or a signal of sustainable strengthening in consumer appetites?
Consumer spending is largely explained the increase of the first quarter GDP, reflecting last-minute demand ahead of a sales tax increase. Pre-tax high consumer spending growth largely for durable and semi-durable goods, which was outpacing trends for the run-up to the 1997 pre-tax hike. However, the 2% one-quarter growth of real consumer spending was exactly the same level as 1997, the first quarter's result. Consumers seems to have held back on service expenses to support increased front-loaded demand, while little compensation for employees fell 0.3% for third consecutive quarters of declines. The stronger-than-expected growth was also contributed by the rebound of private capital expenditure. Company has been cautious for increasing capex despite recovering for the profits and the solid growth for the fixed investment plan for fiscal year 2013, but finally began to shred their inhibitations close to the end of fiscal year and the consumption tax increase.
The OECD recently cut its 2014 forecast for Japan to 1.2% from 1.5%, as it warned that Japan's economy may face a slowdown if inflation goes up without wage expansion. Is this a realistic concern in your view?
The OECD's downside revision for 2014's forecast for Japan is partially reflecting the weak growth in the fourth quarter of 2013. Lower level of the stat line caused to the lower year-on-year growth forecast for 2014. IHS also revised down our forecast after fourth quarter GDP released. Our concerns were the slow pace of recovery in private capital expenditure and the weak export recovery, despite of over 20% weakening yen. Private demand will need to take over the driver to the growth for fueled by the public works fueled by the economic stimulus. But first quarter's GDP results showed a rebound for capex, although we expect it will be softening in the second quarter. Annual wage negotiation between companies and unions turned out better result. Although wage increases was probably not enough to offset the impact of the whole tax increase. I just expect the solid labor market and improvement of wages will underpin the consumer spending. I do not see the risk for going up inflation without a wage increase for now, but we need to see if the wages increase will continue for following years.
A stronger yen is presently weighing on Asian shares. With regular discourse of an Asia slowdown, how is this playing out on both stock market and currency performance?
A stronger yen is reflecting investors' worries for the geopolitical risks, uncertainty for the U.S. tapering, lower expectation for Abenomics, and weaker emerging market economics, etc. However, many Japanese companies are comfortable between 100 yen to 105 yen level to make export as well as profits. The current level of the yen shouldn't be harm for Japanese shares. Asian slowdown is a risk for both stock and currency performances, and sluggishness may remain over near term. But the solid U.S. economy and the recovery of the European economies are good for Asian export, which will benefit to the recovery for both markets.
Lastly then, for those hopeful that today's data will mark Japan's economy slowly getting moving again, what will be the next item on the calendar agenda Japan watchers will be watching for further evidence of a pickup?
I just expect Japan's GDP will contract in the second quarter, reflecting the end of front-loaded demand, but will return to the positive growth from the third quarter. At first, we should watch if the strength of the first quarter capex is confirmed by the financial statements of a corporation, which was released on June 3rd from Ministry of Finance. Then we need to watch carefully if the retail sales and the household spending will pick up and follow and how strong it will be. External demand remains also weak. The risk for the Japanese economy, therefore, trade data is also important.
Harumi, thank you. Coming up today on Dukascopy TV, we'll be talking Eurozone GDP, Italy, and gold, so do stay tuned.